All right, guys, this is the gaps. I actually started forget to start recording, but we're doing gaps, and the initial basic look is the creation of an open close pattern, the confirmation of it, and then the test of it. Um, for this look, you want the second candle to close above with a bullish candle. If by chance you see that yes, this candle has been, this level has been tested, and it closes bearish. There is no, that's not valid for you. That's not valid. And I'll tell you how you could still take advantage of this area. But for now, if this candle closes below and is bearish, or even if it closes bearish above, it's no good. It's not, it's less probability. So we focus on bullish for a bullish example. Second entry comes at the second tap. Okay, this is a bearish example. Very quickly. So you have the open and close. You have a test, and then you have entry. Many times what you'll see is this gap is going to also line up with SNR, and we'll go over some examples on that as well. So red, or actually pink. Again, as I was saying before, after you guys learn about trend lines and more of a deeper understanding of entries, I will also explain a deeper understanding of gaps and how you can take high probability ones and use them to your advantage. I will also say right now that gaps are super, 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 super powerful. They are pretty much sometimes known as, in other communities, they're known as market movers and market drivers, market players, whatever. But all you got to know is that gaps are going to be something that we prioritize many times over SNR. So it's a very simple look, but it's super powerful, and not too many people really teach it or know it. But this will be, there's people that I know who just trade gaps and nothing else. So it's just one line. I call it the one line of wonder sometimes because it's a really powerful entry. It's really powerful for entries and very powerful for analysis as well. So yeah, let's go into the chart and look at some examples of what I mean. And then there's also one other look of a gap that I will also go over. So the standard look is going to be something like what's the ugly one? Okay. So I should go into H1 and go back because recent price action is super ugly. So yeah, so this is an example of a gap entry. You have these two candles creating your gap level. The third candle comes up and tests it. And your entry comes right here. Don't worry about how big this wick is. We don't care about the wicks. We will learn how to avoid large floating drawdowns. Just focus on the basic look of a gap. Okay, so you have these two candles, a test of it. Third one, we don't care about the wick, but the entry is what we mean. The test of it is what we care about. Um, last week there's this one guy who asked a question about the closure of this candle, and it's closed bullish. In real time price action, you don't really know. You don't know how it's gonna close. It's just trading view. Yes, we have the ability to go back in time, but it doesn't tell us the creation of the candle. But in real time, this candle is actually bullish like this. When it comes to this level and you see it's going, it's going, it's going, it's going, it's bullish on this point. So you might be a little intimidated by this. But with your deep understanding that we're already in a bullish market, and there are some other things that I will go into that will explain why this level was actually rejected and price continued to give us a massive sell for almost
I have a question, Robbie.
2,000 pips. Yeah, what's going on?
So for that candle that closed bullishly, but with the rejection,
Yeah,
this one, yes.
that's
If it closed above the line,
if it closed above the line, you would generally consider, okay, so if it did something like this,
yeah,
in most cases, you would think of it as a breakout. So you want to observe that. You want to observe that. Generally speaking, yeah, you're going to experience that. Like, you're going to experience this. You're going to experience something like that, right? It
yeah,
happens. It happens. Um, but why did this level not hold instead? It's most likely because of multi-time frame level. So there's probably something on H4, like right here, that gave us that sell off. And then your trend line and yeah, your trend line. Is there one here? I don't know. There isn't. I'm not gonna force one, but let me see if there's anything on H4 that's going to show why it didn't hold here. Well, actually, one other thing is this level wasn't, there was no rejection at this level, so it's not going to give you the probability of this one holding price down. But if we do look at H4, let's see. Yeah, it's this SNR level right here. It's what should have been prioritized, and trend line is right here, I believe. Something like that. Yeah. I mean, you could have used the other one, but this is more clear, but this is more sharper. Yo, last week when I had a class with the other guys, I showed them all my entries last week. Dude, I was entering on 4-hour time frames with super minimum drawdown. So something like this, you're gonna see, you're gonna begin to see how you can enter on the 4-hour time frame with this kind of entry, with
yeah.
the combination of SNR and gaps. So you're fine. You're just gonna learn about gaps today and the basic look. Okay,
Okay.
cool. So you have some more examples, this is a question that someone also asked last week about this basic look right here. So you see how there's a bullish test to it. This candle came up and closed bullish. The following one tested it again and closed bearish. And with your understanding of price already going down and your bearish storyline, you could have taken this and through your back testing and practice, you're going to also be able to filter out low probability and high probability gaps. It's just a matter of time, practice, and time filtering out. Because if you take every single gap that you see in the market, you're gonna blow your account. It has to be
Yeah.
systematic, and we're going to filter out the noise too. Okay,
Okay.
so
So,
yeah,
I want to ask about the line you just drew on the previous one. So we had a rejection. Yes, here. We had a rejection here. Then we had a bearish candle closing below it. Do we still use the line to
yeah, yeah. You can still
we
use
still
the
use
line.
it here? Here.
Yes, yes. Oh, okay. So this I guess this is one thing that I could tell you with a deeper understanding of gaps is that gaps can be tested obviously multiple times, be tested multiple times. You're gonna see that with your assignment that sometimes gaps are tested 3, 4 times and they still work. In this way of doing things, you're taking the entry at the second test, right? Um,
Yeah.
Once you go to the third or fourth, let's just keep it at third. Once you go for third tap and above, the probabilities aren't so high, are not so high. It
I see.
becomes like 50-50%. Whereas second tap is usually 70% and above with everything else combined, all your knowledge.
Yeah.
70-80% above, and it's very sharp.
Okay.
But
Yeah.
third tap and above, you want to kind of be wary and you want to be a little skeptic about taking it. So again, this is a look right here. You have a gap, open, close, test and close below, and a test and a drop. Again, don't worry about the wicks, but yeah, this is the look. So this example is of a gap that you wouldn't want to really look at. You have open and close. You have a test, but it closed bullish, which is already a red flag for you. You wouldn't even want to look at it. This third tap, it would have worked, but it would have came out and stopped you out. So this is something that we do not want to really pay attention to. There's obviously going to be a way where you could have gotten involved into this, and that's from what I'm seeing, it's something like okay, so actually that's going to be our next example, and we'll go over it. Next form of a gap, we'll go over it in a moment. Is there anything else? Gaps.
There is one here.
Yeah, that's a gap. Okay,
This one is difficult to detect, but I meant this one. Gap.
It's definitely a gap. It's definitely a gap. Definitely a gap. This bullish closure below. So yes, okay, so when we were taught, I don't want to break the rules, but when I was taught this stuff, this bullish closure of this gap, would be nullified. It would not have been a gap that we would have taken a trade from. Through practice, through more of your understanding, you're going to find out. See, I don't want to mix multiple things together. But you see how price came down and it just fucking melted. You know what I mean? It price
Yeah,
stopped right there and it just went
yeah.
went to hell. Yeah, yeah. I will explain this later on and just focus on the basic look for now and get an
Okay.
understanding of what it looks like. But you will see stuff like this happen all the time. This is a gap. First tap, second tap entry right here for a nice sell-off. So far I've been showing you bearish examples. I want to show you some bullish examples. Let me go into bullish market sentiment. Yeah, so this is open and close, bullish closure, and entry comes here. It's a good example of how much it just explodes. So you see this one. For now, when you do your assignment, try to avoid doing these examples with the bullish closure, with the bearish closure, excuse me. Okay,
I didn't
what
get what you.
right here, this was a bearish closure and then a test again. So we would want to see price come here and close bullish for this level to be
Oh, okay.
validated, and then you would take the entry at this point. Yeah,
So,
not the
so it's not
clean.
not just about the rejection. It's about the close as well. Yep.
Yes, exactly. About
Mm.
the closure as well. It's also in the PDF when you, if you look at it,
Yep.
it does go into explain that in a much cleaner way. There's a lot of information on the PDF, so look at it if you ever feel you need some more extra refreshment.
Okay. It's good. I always check it.
Yeah, yeah. I mean, the whole strategy is there. Sometimes you just need a visual demonstration of it, which is why I'm here. But yeah, that one's definitely no. There's this one kid that I explained the strategy to just from the PDF, and he was like already taking it live. Yeah, he's actually a close friend of mine, doing really good. So yeah, look at this one. We have you have open and close, a bullish closure, and a test. And you could take advantage of this. You can see right here again is you have a gap right here with the test with the bearish closure and then entry here. And then what you see is, I don't know, there's another gap here. No, not another gap. But yeah, there's like a ping pong style gap to gap. Um, this one, oh, I don't like it. Yeah, another example of gap.
Yep. This is a good one. This is easy.
Yeah, there it is. Gap, test, that's number two. Pop.
Yeah. I see.
Okay, so that goes for the look of the regular gap. The next one is called breakouts. Yeah.
Hmm.
So the look of it is you will have, oh, sorry, go this bigger. You will have two opening close candles, and then you'll have an engulfing, so a breakout, This is bearish example, by the way. And we have a breakout. This level is still a gap. It's still a gap. It's still something that you might want to focus on as well when price comes up to test it.
Okay.
So what you'll see is you have this level, price comes to test it and closes bearish. This gap level becomes something that you want to observe in the future. Because what can happen is price can come back into it and then sell out. Yeah, this makes sense.
Yep, makes sense.
Okay, this is a bearish example. Bearish example should be like this. And this is bullish example. So you have open and close, breakout, test, test, entry comes to here. And this is called the breakout gap. I love breakout gaps. They're like one of my favorites in this whole system. They're very powerful shit. Something like this. So have this open and close. This is a breakout of this gap level. And then price comes and tests it and just goes forever. It goes to heaven.
This is a good example.
Yeah, this is not the cleanest example because you want to see yeah, like because I'm teaching it and you want to see the cleanest setups, you want to see these three candles just blow past it, or at least these two candles blow past it, right? So then you got your first test here and then your second test here. It's not the cleanest, but if you look very closely,
I see. Yeah, I see.
Yeah, that's good. That's good. That's good. And this is an example of a low probability gap. You have the breakout with this opening close level. You have a bullish initial closure, and then entry would be in the second one, but low probability. So that's like 20-30% instead of 70%. This is a regular gap. See if this level works. No, not really. Breakout gap, breakout gap, 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 gap. This is a regular gap. Good one at that. Another regular gap. Let's see.
This one, maybe. Yes, here. I mean,
See, see. I would consider this just a reaction at this head and shoulders right
okay.
here. Yeah. Oh, look at that head and shoulders. Um. So this is a variation of it, but it's still valid. Might not be the most clearest one, but it still is an example. You have the gap level right here. Um, I will give you some nuggets in this one. So why did this level, why did this one hold, and or why not these ones? Why did there's no really good reactions from these ones or this one? Is because if you look at this area right here, this is a strong area, no? Would you say that? It's caused this massive movement. You see price, first of all, it broke this support, and then this area is reacting off of something back here. Maybe something like this. We can just take an example. We can say that this is at this point in time right here, this rejection here and this breakout is indicating some type of bullishness, right? What you can see is this open and close on a lower time frame. It's gonna look like this. It's gonna look like, okay, a support, and then maybe some SNR pattern that we know already, test and then drop. It's gonna be like that. I don't know if I can rewind in time, but in between this candle and this candle, you're gonna see SNR happen all over again. That's just the very nature of what the strategy entails. MTF is your best friend.
Yeah.
But your understanding is that this open and close broke this one out. So you have this my level breaking this out and then price coming back up to break out. This reaction here is coming off of head and shoulders right here. Right? It's coming off head and shoulders here and it's breaking out. So there's multiple breakouts of key levels. You have key levels in here, you have key level here, key level here. So we could say that price wants to be bullish. Now, if you didn't get this entry, you want to get back in, how can you get involved? Then you want to start, we're going to go over this. I swear we're going to go over all of this later on, but I'm just giving you an extra hint of the logic. Maybe you can start forward testing it.
Yeah.
So you have the breakout, you want to get in and you want to find out some good areas. When you see this level get rejected one, you're like, okay, fine. So my logic is this open and close was the cause of this breakout. Price just broke out to the upside and it's retesting this level. So in your mind, you're thinking, wow, this is actually a strong level. The next time price comes back to test it again and it flies. So that's slowly how you want to start applying gaps and using more logic that instead of taking every single gap, you want to be able to understand the story behind it. You know what I mean?
Yes, I see.
Very.
It also looks like a head and shoulder. Yeah.
It also looks like a head and shoulders. Yeah. Yes, it does. But yeah, I mean, It is the Head and Shoulders. It is the Head and Shoulders. But the example of this this price action, the reason why price came and tested this level so many times is because of the strong uh break of this and then a test of it. You know what I mean? It is. So if you wanted to get involved, right? So for example, this one, what you'll see is we what you see is okay, we have this gap here. It's been tested multiple times. You know how I said the first tap is your confirmation, second, third. The next time you really wouldn't
Yeah.
want to take it. But what happened was price broke out again multiple times. So you have this breakout here, this breakout here. What happens when there's a breakout? Anytime there's a breakout, there's always a pullback, right? There's always a pullback. There's always going to be a pullback. If it's this SNR or some type of engulfing pattern here or some type of trend line, there's always going to be a retest. So to get involved in this one, you could pull this level. You could also pull this fresh SNR right here at that moment in time. For this buy up, you could see this fresh classic SNR. Yes, there's multiple levels here. You can see that you have the shoulder level. To get involved in this one, you would really want to focus on pulling a fresh levels and trend lines. If I could see one trend line in this time frame, let's see, there's one here. Yeah, that's your trend line right there. One tap, two tap, three tap. This is also in our PDF with the different types of trend lines, but you can see on the H1, your entry is there. If you use even a 20 pip stop loss, you're in very super little float. Let's see how much float you have in this one. You're in about less than 5 pips floating. So
Stop
yeah,
loss based on what?
stop loss is, well, entries are gonna come later on, but very quickly, your entries are always going to be below your entries are always going to come below your SNR level. So say, for example, you used say you use this H&S level. You're observing this H&S level for price to react, which it did. Your entry cannot come in unless you can identify a trend line that is below this SNR level. If you're buying your SNR level, your trend line has to cross the SNR. So for the third tap, it must be below the SNR. If you're selling, it's just the opposite. So for example, if your resistance is here, your trend line is right there, tap one, tap two, for example, tap three must be above this resistance. You understand? So it gotta be like this,
Yes, I see it. Yeah.
something like that.
So only three
Trend,
taps trend line, and
yes,
we don't.
three taps. Three taps, yep, three taps.
Yeah. Okay.
Three taps is the key, is the goal, is the code. Yeah, so you see that simple, pretty good. Let's try some more examples, and I think that should be enough for your understanding of a breakout gap. Also, if there's any questions, you can always ask them later. Okay, come on, let's see. This is one. Let's see. It's a good one though. No, that one's not good. That's not good. This came from this opening close, regular gap. Da, 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 da. Yeah, okay, that's nothing to worry about for now. We got this one. We got opening close, a breakout of this level, tap and tap. Do you see it? Oh, I gotta make it solid.
Yes, I see it.
Cool. This level didn't give you that huge reaction because of the bullish nature at the moment.
Mm.
Huh? Okay, let's see. Do you have any questions about gap?
Yes, I have a question. It
Sure.
doesn't have to have a real gap like FVG, right?
No, no, FPG, the fair value gap. No, no,
Yeah.
no, 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 no. That's no, 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 no.
Okay.
That's complete bullshit. You don't need to. You don't need to know any of that.
Okay.
That's gonna make your understanding much more difficult. Don't use
Okay.
any algorithmic smart money logic in this strategy. If you try to combine, which I've done it myself as well, and many people are still doing it.
Yeah.
What you try to do is if you combine two schools of thought into one strategy, you're going to get two biases. You're gonna get two results and two views, and um, you don't want to do that. It's gonna make it your mental capacity. You're gonna drive yourself crazy. If you look
Yeah.
for SNR and then you say, okay, I have my I have my SNR levels here. I see a breakout here. I see order block here, or displacement, or fair value gap, or something. You don't want to do that because you're going to mark out this order block instead, where you can mark out this very clean line right here. That's that line, and you see you have your trend line here. Your entry is going to come right here, tight,
Yeah.
as opposed to this one where you do this. Trust me when I say this, bro, your entries are going to be so much more prettier, tighter, cleaner, efficient,
Mm.
and the logic is just smart money. What people try to do with smart, I don't want to bash them. I really don't want to do that because I traded smart money and it's made me a lot of money, and I lost a lot of money as well. But with smart money, people try to like even with um even with like the displacement, they try to explain um the actual reason for price to retrace. But like for this one example, you'll have this major breakout here. What I always found subjective was that okay, there if you switch to H4, this is displacement. This is a lot of space that needs to be filled. Why didn't it come fill here? You know?
Yeah.
So you see yourself marking out this level here, which you got stopped out, this level here, which you get stopped out, and then you look at this one here. Okay, price is going to sell here, and you get rejected, and you never get anything, and you just took two losses. Whereas if you focus on this gap level. Very clean. You just gotta be patient. But gotta be extremely, extremely, extremely patient. You see that this open and close formation was also the cause of the breakout of these levels. And then you have your first rejection here. You get this entry. When you get this test right here, you could take the entry of this gap level, and yeah, it's like going to
Yeah,
give you massive amounts of money, tips. So
yeah,
yeah,
I
don't. I know you're coming from a smart money, and it's gonna take some time for you to change your views and just focus on SNR because you probably have been doing it for a long time.
yes.
Yeah, so
True.
in the beginning, whenever I whenever I did my analysis, I would look at this and say break of structure, and then I would say this is liquidity inducement, this is order block. Like you don't have to do any of that. Yeah,
Yeah,
yeah, yeah.
I see. Yeah. Thank you.
No problem. No problem. So this is the breakout right here. Tap, test, test there. Tree. Excuse me. Cool. I think that gives us a couple of examples that we can all look at of what a regular gap and a breakout gap looks like. That is the fifth and final SNR level that we're going to be studying. So we have 5 types now. Classic, breakouts, H&S, BH&S, gaps, slash breakout gaps. These guys right here are your fundamental market drivers. You'll see that price will always give us a reaction of movement here. And if you align yourself up with the storyline and multi-time frame analysis with your trend lines, you'll see that your entries and your logic is going to come from these levels. Next week, we're going to have class again at the same time, 1 p.m. New York time. We're going to go over multi-time frame, and then we're also going to go over some storyline. Storyline, we're going to give some time. We're going to give it maybe, so next week, we're going to give storyline 2 or 3 weeks. Everyone, it's going to take a lot of effort from you guys, and it's going to be in-depth knowledge because now you're going to be applying logic instead of visual cues. You're going to have to use your brain and see pretty much you're going to start using probabilities, logic, and the technical stuff that we just been learning for the past week. So that's a very intense couple weeks. I'm looking forward to it, and I hope you guys are also picking this up very quickly. I mean, you guys are doing very good, by the way. So I encourage you to continue going, and I also encourage you to begin using live market data to practice marking and identifying your levels and seeing how the market has been reacting and moving. Use gold for now. Just focus on gold because I've learned that these strategies have been designed around gold, and you only need to trade gold. Whatever you do with investing and stuff, that's later. But for day trading, just focus on XAU USD. Very quickly, what's going on here? So basically, for my logic of this trade, or idea of bullishness is that there's a couple monthly breakouts right here. Every time gold creates an all-time high, does it does give us a deep retracement. Being that it's monthly, this is a little bit advanced knowledge, but I'm just gonna teach you guys anyways. But price is reacting from this wick to wick trend line. Readjusting on the weekly. On the weekly, you have a bullish storyline because you also have a breakout here, breakout here, breakout here. So your logic of this breakout is anytime there's a breakout, there's always going to be a pullback. And you see prices pulling back on the daily. There's multiple levels that you want to be focusing on. So yes, this is a rejection. This could still drive price up forward. So we would want to look at this daily fresh level because we have daily to daily. So this daily was the breakout of this. We want to see price either come back into this level and go, or something like this and go. It can most certainly go from here if H4 tells us something. So let's go into H4 and see what H4 is telling us. Okay, I'm gonna mark out this level right here. Okay, so H4, what it's showing us, which is sports outcome. Okay. So my broker on my phone showed me something like this. As I showed you my entry from last Friday, it was something like that, and the trend line was something like that. I got in at the bottom. I'm still in those buys. I actually have to check my phone real quick because now it's selling. Yeah, I have to exit my positions, but I expect price to come down. This is all just the reason. Okay, so then you start to apply the knowledge of gaps in a little bit more deeper knowledge. This gap right here was a rejection, but it was with a bearish close, indicating that price would still like to go down, but it doesn't give us a clear, definite time as to when it wants to go down. Let's just see one more thing very closely. This, yeah, so it is a rejection. H4. Okay, this is also giving us some good information. If this next H4 candle breaks out of this gap level right here, then you could have a decision that price wants to go down. And like I said, we're gonna play from higher time frame levels. We want price to go into daily levels, test at least some daily levels below, and then go back up if we are bullish. We got to stay bullish for now because last week Friday we had a weekly close bullish and daily bullish. So we got to stay vigilant. H4 is currently bearish, so you would look for sales. You would look for sales intraday, with the knowledge that we want to align weekly, daily, H4 together to be extremely bullish, but that might not happen. That's ideally what we want to see happen if we're gonna be bullish. Let's see what else. One other confluence that I found to stay bullish for now was I was on the daily. This is more, again, this is a little bit advanced knowledge, but this gap right here was a level that people were looking at last week. You see that we have this rejection here. Many people were trying to take sales from here. But what happened was price broke out from here, tested it again. The third test, people are finding that it's not valid anymore, or just it's run its course, and now we want to find another fresh support. I do have this as well in my chart, and I found that these levels are important as well. So keep an eye on these levels, mark out your levels, check out what you can already identify with what you already learned, and make some type of conclusion in your mind about where start practicing storyline and where you expect price to go. Okay.
Okay.
Are you there? You still with me?
Yep. I'm with you. Thank
Cool.
you.
So yeah, that should be it for today. If you have any questions, man, just post it in the chat. Obviously, yeah, if you I think I don't know if they posted their homework yet. Let me see. No, nobody posted anything on their homework yet, so
Yep.
you can always ask me, and I'll
Yeah,
be able to help you.
so for now, I don't have any questions, but I'm going to do the homework. And if I have
Yeah.
any questions, I'm going to ask you.
Yeah.
Yeah.
Please do, man.
Thank you very much.
That wraps up for today. And we'll talk again. Okay.
Yeah, sure. Thank you.
All right, man. Take care. Enjoy. Oh, also one more thing, bro.
Yeah.
I actually haven't received the funds yet from Western Union. When you get a chance, yeah, it's I checked it there. Just check, just look out for your email and see if you got anything about it.
I'm going to open Western Union now and check.
Yeah.
Good.
Yeah. All right. Cool. Just let me know, because I checked this morning and there was nothing there from Western Union, and you sent it last Thursday. Okay. All right, man.
Yeah. Thank you, man. Thank you.
All right. No problem.
Bye.
Bye-bye.